Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest stock market trends, help you understand how is the market really trading at this point in time in terms of the sectors that are moving the most in trade today, the top stocks that you need to watch out for, and also what should be your investment strategy as we see the markets approaching the all-time highs as well. We'll also be joined by an expert to share all his views and the top stocks on their radar as well. But first up, a quick check on the markets. Well, you can see some signs of green now emerging on the screen. The markets have turned flat with some buying signs both on the Nifty and the Sensex. The first half of the trading session was absolutely in the red. In fact, we opened 0.5% lower today. But look at the kind of recovery that we are already seeing as we approach the second half of trading session. 10 points up for the Nifty, 18,707. The Sensex up by almost 10 points, 62,878. So what's really helping the markets recover all those losses? Well, it's the banking stocks that are moving up higher in trade today. You have the PSU banks, the private banks, all up in trade as well. Almost 0.5% increase can actually be seen on the private banks. PSU banks up 0.7% in trade. Overall, Nifty Bank is up by 0.3% odd. It's looking like you can actually see the recovery that we've seen from the lowest point of the day in intraday session, in today's trading session. The PSU banks taking the lead right there, up by 0.6% odd in today's trading session. Apart from this, it's the metal stocks that are shining brightest in today's trading action. Over 1% gains can actually be seen. Well, a lot of indication from overseas markets right there. China really reducing some of those lockdown restrictions, and that is really fueling fire in the metal stocks. We're also seeing the weaker dollar adding to the momentum, so you can actually see that uptick in the last 15 odd minutes, over 1% or so. So it was in the green throughout the trading session, just like minor dips in the early trading action, but you can actually see a recovery. It's coming towards those almost high point of the day as well. Apart from this, you have slight gains coming in on the royalty space, on the FMCG space as well. What's not doing well is in fact the auto stocks, the IT stocks that are down in trade, and the pharma stocks as well. So slight defensive majors that are down in the action today, and the auto stocks are moving in the slower lane as well. Talk about the kind of movement as we see the top Nifty losers and the gainers in trade today. Well, the gainers will have all the metal stocks because that's where the action is coming over. So Hindalco, Tata Steel, JSW Steel, and then you have UPL and ONGC up in the trade as well. So you can see a 2 to 4% odd kind of a move that you've seen there. On the losing action, you do have some Adani major stocks. Adani Group stocks are looking at some profit taking today. Over 2% cut on Adani Enterprises, and similar cuts if you see across the Adani Group stocks. Tata Motors, Apollo Hospitals, those are the stocks that are down in trade. Apart from this, Tech Mahindra, Britannia and Ultratech Cement also seeing some cuts in the early trading action right there, about 0.5% or so. Let's welcome our guest for today. Mr. Rajesh Palviya joins in. He's the head of technicals and derivatives at Securities as well. Welcome, sir, and thank you so much for taking the time out. So first up, your take on the markets. Well, everybody's been eyeing that 19,000 mark on the Nifty after we've seen some record levels in the previous week as well. So beyond that, how soon do we see that 19K mark really on the Nifty? Your take, sir.
Good afternoon, Sakshi. So overall setup for the market is bullish, and one should use any minor corrective action as a buying opportunity. We are just 300 point away from the 19,000 mark, but it's just a matter of time. We will be crossing 19,000 for sure. Maybe in next couple of trading session, market structure is suggesting that the kind of buying action we are seeing from the metal, cement, real estate, as well as banking financials are also continuing their contribution. So very soon we are going to cross 19,000 level also, and we can continue further higher from those level also. So overall, even if we look at from the global perspective also, most of the development which are happening from the global front is also supporting here as a bullish trend. And the sectorial rotation which is also playing out in the market, mid cap, small cap is also contributing in this rally. So it's across the board buying action is happening in the market, so which is clearly suggesting that there is a confidence on the street. And we can see a 19,000 level in next couple of trading sessions also. So as of now for Nifty, till we are holding above 18,450, one should remain on the buying side of the market. Any minor dip, any corrective action should be used as a buying opportunity. For Bank Nifty also, we are bullish till we are holding above 42,500 level on a weekly closing basis. The trend is likely to remain on the bullish side. So one can use any minor corrective action in Bank Nifty also as a buying opportunity. And once we crosses above 43,500, 600 zone for the Bank Nifty, then possibly Bank Nifty can scale up higher towards 44,500 also. And for Nifty, once we able to cross above 18,850 zone, then possibly next target for Nifty should be around 19,200. And we are expecting in next 1 or 2 week, we are going to scale up towards 19,000 level.
Okay, in the next 1 to 2 odd weeks, you may be able to see the Nifty scaling that 19,000 mark. In fact, 19,200 also on the cards, looking on the technicals as well. So definitely, the market's approaching those all-time high levels and inching towards that 19K mark. Right now, the markets are a little flat with some volatility that you can see on the indices. But like I was pointing out, it's the metal space that's shining brightest today. So Rajesh, if you could help us understand your take on the metals pack. We have seen a lot of volatility in the metals counters throughout this year of 2022. But are things looking finally better off structurally? Is there a case for investors to really look at some of these stocks now as a positional trade or as a long-term buy as well, looking at favorable global cues also coming in today's trading action?
So if we analyze the Nifty Metal Index, so almost now it's inching towards its all-time high trajectory. As the all-time high was marked in April 2022, and looking at the overall scenario for this metal index, now it's almost near to those level. So we believe that the kind of recovery which we have witnessed in last couple of months in the Nifty Metal Index is clearly showing that after a consolidation, after accumulation from the lower level, most of the metal stocks are ready for further up move from the current level also. Stock like JSPL, Jindal Steel and Power is looking very attractive, and we believe that this stock can continue its upward momentum. Hindalco, Vedanta is also looking very promising. So those who are already bought at the lower level can remain invested and can hold it even at the current level also. They still, we believe that another 5 to 10% really we can see in short period of time for whole metal stocks. So one can buy and accumulate the stock JSPL, JSW Steel, Hindalco, Tata Steel, even NMDC. These all stocks are looking very promising, and we believe 5 to 10% up move we can see in the continuation of this uptrend.
Okay, understood that. So some stocks that you can definitely keep on your radar from the positional perspective right there, that have been suggested by Rajesh right there. Apart from this, the mid-rung financials are moving up in trade in today's trading action. If you see stocks like M&M Financials, Muthoot Finance, those kind of stocks are up in trade. Of course, brokerage houses also have some positive, outlook on that as well, especially, brokerage houses like Morgan Stanley have kept some of these stocks on their radar. In fact, or even on the top financials like ICICI Bank, Morgan Stanley is bullish and sees a 34% uptick right here. Your thoughts on the financials pack? We have seen a substantial recovery. These stocks are definitely taking the lead in the current rally that we are seeing. Every time the markets go up, it's the financials and the banks that actually take the lead right there. Your thoughts on both the top rung and the mid rung financials right there?
Definitely. So, NBFC like financials are also contributing to this upward momentum, and in line with the banking stocks, all financials are also showing good buying interest. If we talk about M&M Financial, stock managed to give breakout of its September swing high, and looking at the setup, we believe that M&M Financial can continue further more upward momentum towards 245, 250 zone. So our advice is to remain invested in this stock. Even at the current level, also one can add the new position also. 255 to 60 can be a near-term target for the stock. One can keep a stop loss of 230. Even the from the same space, L&T Financial is also looking very attractive. Stock is now in process to complete its rounding bottom formation on weekly chart. So L&T Finance is also looking very promising, and we believe 105 to 108 should be the target in near-term basis. One can buy this stock with stop loss of 86. Another stock, as you discussed about Muthu Finance and Mannapuram Finance, they are directly linked with the gold financing business. And
Yeah.
as seeing, gold is continuously moving up since last couple of weeks. and almost we are trading near to 54,000 mark for the gold. So looking the rub-off effect is also taking place in this stock, and looking at the setup, we are bullish on Manappuram Finance, and
Okay.
the setup which we are seeing on the Manappuram Finance, it's almost on a verge of giving a breakout of its multiple supply zone at 125 level. If stock able to continue its move above 125 level, then possibly next target for Manappuram should be around 145, 150. So Manappuram is buy with stop loss of 120.
Okay, understood that. Let me actually take it across to my colleague Tanya, who has all the details of the reports that have come out on these specific stocks in the financial space as well. Tanya, take it away. What are the key highlights that you found in these reports?
Absolutely. So first of all, Sakshi, Mahindra and Mahindra Financial Services shares, if you see, they were up to the tune of 5% today. Now, this is after the company reported a 75% YOY growth in disbursements in November and on the back of positive macro environment. And if you see the year-to-date disbursement at approximately 31,050 crore rupees registered a YOY growth of 99%. And the company also expects further improvement in stage 2 and 3 assets in December. Now, brokerages are, of course, looking bullish on this particular company. So, CLSA has a buy call on this stock with a target price of 260 rupees. And it said that the company has made many on-ground changes and is witnessing the impact of that in its numbers. Now, Morgan Stanley also has maintained an overweight call on this stock with a target price of 275 rupees. Morgan Stanley has in fact maintained its overweight rating on Manappuram Finance also with a target price of 150 rupees and an equal weight rating on Muthoot Finance with a target price of 1150 rupees. However, it believes that Manappuram Finance stock looks better positioned. Manappuram Finance company looks better positioned than Muthoot Finance. Back to you.
Okay. Okay. Thank you so much, Tanya, for sharing all these updates right there. You already heard Mr. Palviya talk about, these mid-rank financial names, especially those focused on the gold finance. From gold finance, let's actually talk about one of the jewelry space as well. Kalyan Jewelers, that stock is on my radar because that stock is catching the eye. The stock has been up about 18% odd in the last 4 days itself. In fact, the company has recorded a 20% rise in the Q2 revenue as well. So the financials are looking positive too. And looking at the current ongoing wedding season, the jewelry stores and the companies are actually quite bullish on the demand scenario right there. In fact, today gold prices have also hit a 5-month high as well. So the prices are moving up. The margins may also increase for them. Your thoughts, Mr. Palve, on Kalyan Jewelers? Is that a stock that is on your radar? Do you like that stock? 4.6% up in trade today at 114.
So stock is now enjoying its all-time high trajectory. Post IPO, there was an underperformance in the stock, and almost after breakout of its 90 level, stock is consistently showing good buying traction. And looking at the weekly as well as on the monthly chart, we are bullish on the stock. The breakout which we are witnessing on the weekly chart is clearly indicating that now stock can inch up further higher towards 130, 135 mark. So those who are already holding, or if you are buying at the current level, also can buy with stop loss of 106. Upward target is 130.35.
Okay, understood that as well. Now let's understand your specific stock recommendations. If you could share with all our viewers any stocks on your top radar that you believe that in the current market scenario could actually help investors garner maximum returns in the near term.
So Sakshi, as we spoke about metal space, from that space we like Tata Steel.
Okay.
Still from its all-time high trajectory, stock is down around 15 to 18%. And looking at the traction in the whole metal space, Tata Steel is looking promising from the risk to reward perspective also. In this last 3-4 trading sessions, the up move is now sustaining about 200-day moving average, which is also adding up the bullishness. The kind of breakout we have seen in the weekly as well as on the daily chart is suggesting that Tata Steel can continue its upward momentum towards 125 to 130. One can buy an accurate Tata Steel with stop loss of 100 in it for target of 125, 130. Another space which we are liking at the current juncture is real estate space. A lot of real estate space has shown good buying interest in the last week also. From that space, we like DLF. Stock managed to give breakout of its multiple resistance zone. Almost stock is trading above 52-week high level. So looking at the breakout on the DLF, we believe that DLF can continue its upward momentum towards 445 to 460 zone, one can buy an equivalent stock with stop loss of 395.
Okay, understood that. So DLF and Tata Steel on the top radar right there. The targets and share stop losses have also been shared. Well, thank you so much, Rajesh, for being with us on this show and sharing all these insights about markets and talking about these specific stocks that are on your top radar as well. Let's quickly look at how the markets are trading at this point in time. Before we close the show, let's have a look at what's really happening at this moment as far as the markets are concerned. Well, it's a divided trade that you're actually seeing. The Sensex still hovering below the flat line, where the Nifty is just flat at this point in time. Both stocks now, fluctuating between the red and the green shades as well. 18,697 for the Nifty right now, 62,853 for the Sensex as we move. Now, what we'll have to wait and watch out for is that whether the second half of trading action will see a sharp bounce and a recovery from the first half of trading action, and whether the markets will again be able to, touch those record levels that we saw in the previous week as well, and then finally move on course to touch that 19,000 mark, which Rajesh expects in the next 1 to 2 weeks as well. With that, we wrap up this edition. Many thanks for tuning in for now, but do stay tuned on to Business Today TV for a whole lot more coverage on the stocks and the world of business as well. Thank you so much for tuning in for now.
Tech Today is on the road yet again. This time we're in chilly London. The last time we were here, it was much nicer weather. It's chilly, but we're warming up by understanding how race car tech from the racetrack